gentlemen, good day and welcome to the Q1 FY2024 conference call of Sigachi Industries Limited. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Ms. Purvangi Jain from Valorum Advisors. Thank you and over to you.
Good morning everyone and a warm welcome to you all. My name is Purvangi Jain from Valorum Advisors. We represent the investor relations of Sigachi Industries Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the first quarter of the financial year 2024. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's Concall may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, I would like to introduce you to the management participating in today's earnings conference call and give it over to them for their opening remarks. We have with us Mr. Amit Raj Sinha, Managing Director and Chief Executive Officer, Mr. O.S. Reddy, Chief Financial Officer, Ms. Shreya Mitra, Company Secretary. I will now hand it over to Mr. O.S. Reddy for his opening remarks.
Thank you, Ms. Purvangi. Good morning, everybody. It is a pleasure to welcome you to the earnings conference call for the first quarter of financial year 2024. Let me first brief you on the first quarter financial performance, after which our MD, Mr. Amit Raj Sinha, will brief you on the operational highlights for this quarter. The operational revenues for the quarter were around 85 crores, which grew by 8% year-on-year. EBITDA reported was rupees 16.4 crores, representing a flattish growth year-on-year, and the EBITDA margin stood at 19.36%. Net profit after tax reported was rupees 11 crores, a decrease of 15% year-on-year, while the PAT margin percentage was 12.87%. Now I hand over the call to our MD, Mr. Amit Raj Sinha, to give you the operational highlights.
Thank you, O.S. Reddy, and good morning, everyone. Welcome to our earnings call. On the operational front, revenue growth was driven by an approximate 10% growth in realizations and 3% growth in volumes on a year-on-year basis. The company is constantly striving to improve upon its R&D capabilities and cost-effective manufacturing processes and thereby remain a manufacturer of choice with highest quality standards. Focus is on high-margin yielding product mix and cost-effective manufacturing processes, effective management of inventory to improve EBITDA and, of course, profitability. The CAPEX project for Gujarat facility for MCC to the extent of around 7,000 metric ton per annum will be added in the third quarter of FY2024, which would contribute to revenues in the coming quarters. With that, I open the floor for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Munjal Shah, an individual investor. Please go ahead.
Thank you for the opportunity. Sir, congratulations for the decent set of results. And sir, really appreciate your prompt action on the royalty part. So my first question was regarding the revenue growth. So when we are mentioning 8% revenue growth, I think you have mentioned that the volume growth is 3% and realization growth is 10%. So am I missing something? If you can just throw some light on it. Hello?
Mr. Munjal Shah.
Yes, sir.
You just indicated that the volume growth is 3% and the realization growth is 10%.
Yes. So, and the revenue growth is being shown as 8%. So, if I'm missing something, if you can just help me understand.
So the revenue combination is, the revenue growth is a combination of the realization and the quantity increase in quantities sold.
Correct.
Over and above that, we also have a sale of services.
Okay.
So sale of services, if I look at Q1 FY24 and Q1 FY23, there has been a nearly 75% increase in our sale of services component.
Okay.
Yeah.
So basically the realization part, the 10% growth in realization part includes this part of services also, right?
No, that's only on the sale of products, not on the services.
Okay, because sir, I'll just add the realization growth and the volume growth, so 10 plus 3%, so the total comes to around 13%. Whereas what we are showing revenue growth as 8%, so that is the reason I placed this question.
Sir, CFO, are you able to make out what exactly is the question? Sir, am I audible?
Mr. Reddy?
Yes. Sorry, I am on mute. Yes, now audible. He is asking, sir, that is, Mr. Munjal Shah, that is weighted average basis. If we add directly, the revenue 8% growth is, that is overall revenue from all the segments. That is including the services segment and all the other segments. This price growth is mainly on MCC business. And
okay.
Volume growth also our manufacturing products.
Okay, sir. Okay.
That's why it will not match, sir.
Okay, noted. Thank you. So my second question is, sir, out of the 287 crores which we have raised, we understand that 100 crores has been used to acquire Trimax Bioscience, and rest 25 crores will be paid after 3 years. So can you please advise on how do we plan to invest the rest of the amount? It would give us a better idea on the capital allocation plan.
Yes, sir. This total, we are raising 287 crores, and out of which 160 crores is allocated for API, acquisition plus expansion. And right now the Trimax Biosciences having a capacity of 92 KL, and there is a possibility for expansion up to 540 KL in future. And gradually we will increase the capacities, and immediately we have to pump in some 60 crores for the expansion. That's why I mentioned 160 crores is the API allocation. And
okay.
Afterwards, and Dahej and Jagadia, we are upgrading the facilities. For that 50 crores we have allocated. And at Hyderabad also we are increasing capacities, for which we have allocated 22.1 crores. And towards working capital we are using 30 crores. And the general corporate purpose, that may be working capital or capital, CapEx, we have allocated 25 crores. Total it is coming to 87 crores, sir.
Okay, sir. Thank you, sir. Sir, my third question is, sir, regarding Tri Bioscience, it seems to be into contract manufacturing and product development line of business for APIs and pharma intermediates. So if you can please briefly throw some light on the rationale behind the acquisition and the valuation based on which we have taken this decision. It would be really helpful.
Yes, sir. I'll just brief up, sir. The Trimax is located in Raichur. It has got 8.4 acres of land is there, and right now the capacity is 92 KL, and there is a scope for enhancement up to 540 KL, and it has got already all statutory approvals, and all the facilities are there, whatever the statutory requirements, and also that is a US approved facility. Right now the company has got 25 APIs and associated intermediate licenses, and 8 APIs and 40 intermediates are readily available, and 137 KL effluent permission per day is approved, and the regulatory licenses are CGMC is there, WHO GMP, Halal, Kosher, and also it is approved by US FDA for critical advanced intermediate manufacturers, and that can be upgraded to API. And also, we presently, suppose if you want to go for the fresh construction for setting up of a unit, it will take the approvals and licenses, it will take around 2.5 years for setting up of the facility. And to get again the US FDA facility, it requires another 2 years, 2 or 3 years. But roughly it takes 5 years to construct the similar kind of facility. That is, since it is a ready-made available facility, having that is a production side and R&D side, they are strong. Financially, they are not strong right now. And we have market network, and at marketing side, Sigachi is strong. The synergies will take the company to highest heights for the future growth. That is the reason behind that, and the valuation also, it is coming roughly to construct this, it will come nearly 150 crores. So
how have you valued the company? So we have paid them based on the sales valuation?
Valuation and also the market, the assessment also we took, and based on that, the valuation, we have negotiated down to 125 crores.
Okay. Sir, one more question if I can squeeze in.
Yes,
I have a few more questions as well. So Hello?
Yes, sir, please.
Sir, can I go ahead? Yeah.
Yes, sir, please.
Yeah. So basically, so as you mentioned, the sales of Trimax has gone from 69 crores in FY21 to 35 crores in FY23. So there was a sudden drop. So can you just help us understand that whether they have trading portion or they have the most of the revenues come from the manufacturing part of it? And secondly, sir, after this acquisition, will the existing promoters continue to be the part of the management team and be actively involved in the day-to-day operations related to the APIs and intermediates?
Yeah, regarding the turnover, at present, because of financial constraints, they couldn't do well, and even some job work manufacturing they are doing, not really the trading turnover, that is job work manufacturing, and that's why it is coming down. Once we come in, it will, we hope it will improve well.
Okay.
And the existing, regarding the production and R&D, the existing team will continue, and later on Sigachi will take a suitable decision.
Noted, sir.
We continue, and we have got market strength is there, and the production capacities and R&D capacities, R&D capabilities are there with them. And even our team also is capable. We do have R&D, and then we have hired the experts of API manufacturing from the API industry. It will help Sigachi to grow further.
Okay, great, sir. So then how do we plan to leverage the existing portfolio of products which Trimax has, and what can be the conservative revenue potential from the current capacity of Trimax?
Mr. Munjal, I'll answer that. So whatever is the existing product portfolio of Trimax, it is based on their competence and historical strength they have had. Now that Sigachi will be in the fray, we have our own set of team, and our immediate target is to see that whatever are the APIs where there is a demand for it in India and in ROW markets, we will commence that for immediate sales where there is an ample opportunity in terms of volumes. Parallelly, in addition to that, we will work on seeing that we file the DMFs and the regulatory system and procedures for the US FDA and EU CEP. So we believe that in the next 9 months, we should be in a position to have this reviewed, and possibly in the next 1 year or so, we should have an audit coming in from the US FDA for certain critical APIs, with that, our market will move from the ROW markets to the regulated markets, and that should see an increased revenue and, of course, margins as well. Did that answer your question, sir?
Okay, sir. If you can just throw some light on the revenue potential, just if a number, if it's fine, if it's possible, then only. Else, it's fine.
Sure. So for the capacities, what is there currently, which is around the 92 KL reactor capacity, we are looking at a potential sales of around 60 CR for the current financial year.
That is FY24, correct, sir?
Yes, that's right. FY20.
On its full capacity, it can reach up to 90 to 100 crores.
And so what are the margins we are looking? So will the margins be in the range of our traditional business, or will it be margin like for 1 year or so,
we are looking at a bit of well above 20%. And once we get into the regulated market, we believe it should be touching 25%.
Sir, coming to our regular business, so when is the new capacity of 7,000 tons? So basically you said that by Q2 the capacity will be ready. So can we expect the revenues to flow in by Q3 of FY24?
So Q3 we will have the commissioning trials being worked upon, sir. So towards the end of Q3 we should have revenues coming in, and definitely in Q4 we should have it completely ramped up, because commercialization trials will be over, and we will be having sales of all the products from both the units.
Okay. So sir, can we assume that considering 7,000 tons per annum the capacity is incremental, maybe 30-40% will be utilized by Q4 FY24? Is it okay to consider it?
Actually, in the first quarter itself, 30% looks very, very high. We are looking at a capacity utilization around 25% operational quarter. So in Q4, whatever is the 7,000 metric ton added capacity, we believe 25% capacity utilization should kick in.
Okay, sir. Noted. Thanks.
So, not on
valuation, you said the 25 crore which would be payable for the rest of 20% stake would be either of 25 crore or 8.5 times of EBITDA that time. Am I right?
Yes. Correct, sir.
Okay. And current valuation is also in that range on 8.5 times EBITDA?
No. Current valuation, it is not based on EBITDA multiples because right now the company is not performing, not utilizing the capacity, is unable to perform it because they have got some financial constraints and there are 4 partners. Make it well. Value. It is roughly it is coming 150 CR, but we have negotiated take an opportunity of the current down to 120.
Because the company has consistently been showing degrowth in revenue. The Trimax the past 3 years turnover, what you have mentioned in an exery. So 35 crore was a turnover in FY23. And what we are saying that 60 crore we can make in FY24. So what actually will drive this level of revenue?
Right now, there is no marketing capabilities for that company, and they are good at production and R&D. Right now, we have identified certain products and marketability of those products, and we have we have engaged certain API people, the commercial technical officer, chief technical officer we have appointed, and we took the market survey and the demand and the current the production capabilities and all. We have estimated that we can achieve this year maybe around 60 CR from that unit. Because we are in marketing side, we have Sigachi has got marketing strength, and their production capabilities and R&D's capabilities the synergy will take the company to a good heights. Okay. So in the 60 crore you mentioned is assuming that integration happens in a Q2, that's what we are expecting, or what's the timeline of integrating this business? You mean to say this expansion about 60 crores? 60 crores revenue, yes. Revenue we are expecting this year, FY24 itself. Now already we have started action on that. We have identified the products and marketability. And my question is that when that agreement, this is under the agreement phase, no? So when this integration or consolidation will start, when that acquisition process will That is immediately. Immediately that will, the board has approved, and then we can go.
And customer base would be the first thing to, push your product there. And finding new customers may take some time. So I understand this, most of your API is related to ARV side, right? Ritonavir and tenofovir, this kind of thing. And there, so customer side, do you see any demand? Because my only concern is that in other competitors having, a demand was not.
business, and there are, of course, many big players, many innovative players, and many generic players in this field. So making space for yourself among this cluster of producers is, primarily driven by the fact that we select the right product portfolio. So product portfolio selection becomes critical, and then planning sales in different markets becomes critical for success.
Okay, great. So, one more question I have is on the product front. So, can you tell me the importance of our product MCC?
Okay.
I mean the niche.
Yeah. In terms of application, I would say that all the tablets and the capsules that we as human beings consume, the solid oral dosage form basically, can't really be made into tablets without the use of cellulose. And in cellulose, the primary among them, the most basic among them, comes out to be microcrystalline cellulose. So I would say that is the criticality of MCC in a tablet formulation or in a capsule formulation. And that speaks about the continued increase in demand and, the same increase in rate of what the pharma industry growth is. That growth comes into the solid oral dosage form growth, and the solid oral dosage form industry growth comes into the MCC growth. So that is the level of criticality. In terms of other industry like food and nutrition and cosmetics, there are certain functionalities which cellulose brings in, which is not evident in any other product. There is no alternate or substitute for this product in terms of functionality which comes in from cellulose. And it is because of this that, and the fact that there are no alternatives, that the demand for cellulose in cosmetics, in food, and in nutrition continues to grow.
Great, sir. Great. Thank you. And final question on my part is, what would be the revenue guidance for this financial or for next couple of years? If you can throw some light on that.
So I can give you a broad idea on revenue guidance for the current financial year. Next year, probably with the API coming in, I think we will probably have to sit back and rework to see which is the best combination so that we are able to touch the maximum capacity utilization of our new installed capacity in MCC and, of course, the new capacity of 92 KL in the subsidiary company which has come in. Considering that for the first 3 quarters we will not have increased capacity come in, and the increased capacity will only come in to the tune of 25% of the installed capacity in Q4. I believe that the current financial year for the excipient vertical would have a growth of nearly around 15 to 17%, and API segment would add in the balance incremental growth.
Great, sir. And the margin, can you throw some on margin?
We are hopeful of continuing our overall EBITDA margins to be 20% plus. Our focus is we get better at it and we gradually move towards a 25 EBITDA. But for the current financial year where the API segment is only adding in terms of India sales and ROW sales, we believe we should only be on the 20% part of the EBITDA margins for this current financial year.
Sure. Thank you so much, sir.
Thank you, Mr. Sampath. Thank you, Mr.
Thank you. A reminder to participants to press star and 1 to ask a question. We'll take our next question from the line of Ankur Savaria, an individual investor. Please go ahead.
Good morning, everyone. My question is regarding the revenue. As per previous cases, you had given a guidance that we will increase 25% of our revenue within this financial year. So if we say that we had a sale of revenue of 300 crores, it adds up to 375 crores for the core business, that is MCC. And you are giving a guidance of 60 crores for the business that we have acquired. So that comes to about 435 crores and 84 crores revenue we have done this quarter. So is it possible for us to do the remaining 350 crore revenue this year? That would be about 50% increase in what we have done this quarter.
So this is a very tricky question, Mr. Ankur. This is primarily on account of the fact that new capacities are yet to tick in, and the API acquisition is just a day old. So maybe it's a bit too early to answer this, but we are working to see how we can, over and above the excipient industry growth, which was looked at as a 25% jump, how we could add in an additional 60 crores on the API front. We have this target set in place, and we are quite hopeful of achieving it.
So even if in case we discount the 60 crores, the guidance of 375 crores is still intact. Am I correct on saying that?
Yes.
Yes.
Yes, that is.
Yeah, because as I remember, you said in the first 2 quarters we will do approximately the same that we did this quarter. And quarter 3 and quarter 4 will have to make a jump of 1.5 times approximately to get a revenue of 25%.
Quarter 4 will take up to quarter 3. In quarter 3, slightly increase would be there, but quarter 4 there would be reasonable increase.
Yeah, so the quarter 3 would primarily be spent on stabilizing the product quality and commissioning the whole new plant. So we believe that by the last month of quarter 3, we should be able to have commercial sales. But effectively, it would be quarter 4 which will, have commercial sales and, show up on the balance sheet.
Mm-hmm. Okay. Thanks a lot and best of luck, sir.
Thank you, Mr. Ankur. Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We'll take a follow-up question from the line of Munjal Shah, an individual investor. Please go ahead.
Thank you for the opportunity again. Sir, regarding the API business which we have entered in, will be more interested in having a contract manufacturing arrangement, or we would be applying for DMFs and and push the products in the market. So what is the strategy with management is working on?
We are working to push our own manufactured products, and we are also exploring the new products. And R&D team also is working on that.
Okay, so we are basically planning to work on branded generic sort of business line, right?
Yes. We manufacture whatever. Few products already identified, and we have identified the marketability, and we have identified the products also, and we are working on that. And shortly we'll come up with the details.
Okay, and these products initially will be pitched to the same set of clientele which we have, or we'll be having a different, we'll be finding a different clientele for the particular products?
Same clients also are there. Right now, the company has got the clients of Laurus is there, MQ, Dr. Reddy's, NATCO, Mylan, MSN, Lupin, Intas, and Strides. There are even Jivika Bio is there. And there are even Hetero is there. Even within these we are also exploring new customers also.
Okay, sir. And sir, regarding the MCC, sir, we'll keep the major percentage of our MCC contribution to the pharma sector, or we plan to increase it for the food and nutrition and the cosmetic sector as well?
At present, 65 to 70% is going to pharma sector, and 20-25% is going to food. Food gradually it is increasing, and obviously food processing food, there is a demand also, it is increased. Based on that, foods there is a possibility for increasing food sector, food sales also.
Okay. Okay, and the margins which we get in the food sector are higher than the pharma sector, or lower?
It is in some kinds of food. We have 66 varieties are there in certain segments, almost same. In pharma only it is a little higher sales would be there. But it adds the revenue, and also overall average profitability also will increase because of the volumes increase in volumes.
Okay.
The profits, the realizations are better in pharma only.
Okay. Okay. Noted. Thank you, sir. Thank you. I'll come back in the queue. Thank you so much.
Thank you. Thank you, sir. Thank you, Mr. Munjal.
Thank you. As there are no further questions, I hand over the conference to the management from Sigachi Industries for closing comments. Over to you, sir. Ladies and gentlemen, we've lost the connection of Mr. Amit Raj Sinha. I request you to stay connected.
Hello.
We have Mr. Sinha back on the call. Sir, can you give the closing comments, please?
Yes, sure. Thank you all for participating in this earnings con call. I hope we have answered your questions satisfactorily and at the same time offered insights into our business. If you have any further questions or want to know more about the company, you may please get in touch with our Investor Relations Manager at Valorum Advisors. Thank you. Stay safe and stay healthy.
Thank you. On behalf of Sigachi Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.